All right. Hello, everybody, and welcome to Ticker Talk. We're going to take a look at the markets real quickly today, and then we will take an in-depth look at some of the stocks that you guys are looking at. So let's just get right into this. As always, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security, and all trading investment decisions are your own and done at your own risk. I think everybody here knows who I am, so we'll just blast past this one. And if you're watching the recording, do me a big favor and go smash that like button. So let's start by looking at the major indices today. And then we'll look at a couple of sectors and things. We'll look at get a feel for what's been going on before we start digging into individual tickers. So we'll start with the S&P 500 as we always do. If we can find, there we go. So here we are in the this is the SPY ETF. Okay, you can see, obviously, we're still in a long-term downtrend, and we're not even threatening the long-term downtrend yet. However, we recently had this head and shoulders, what we would consider a continuation pattern. Okay, so when we see a head and shoulders pattern in a trend, we generally will consider that, like in a downtrend, we see a head and shoulders, what would be kind of a top. If this were in an uptrend, we consider that to be a continuation pattern, and that fulfilled its destiny as a continuation pattern. And you can see that we hit the target like almost to the penny on this head and shoulders. And in doing that, we've created another head and shoulders, except this one is an inverse head and shoulders. Now, when we see inverse head and shoulders in a downtrend, that is a reversal pattern. That could very well mean the end of the downtrend, or that's typically what it does mean, right? That's what we expect to see. We expect to see this go up from here. Now, if it's going to be a reversal pattern, that should be the end of the downtrend, and we should move into a new uptrend. However, the target on this we get by measuring, from the neckline to, in this case, the bottom of the head, and then we add that to the breakout point. That gives us a target in around 405. And you can see we've got a gap area up here. We've got a pretty decent resistance level very near there as well. So that seems like a pretty decent target. And one of the areas I think we should really expect consolidation if we get there. You can see that today, what a weird day today was. And for so many reasons too, which we'll get into. But looking at the daily here, today you can see we went up. We came up into this resistance level of around 388, and we pulled right back. And we've drawn, now this is unfortunate, we have drawn a candle here. This candle is known as a gravestone doji. You can see how this kind of looks like a gravestone, right? If that sounds ominous, it should, because when you see a gravestone doji at the end, in an uptrend, it usually spells the end of that uptrend, or that's what's supposed to happen, right? I don't actually know. I should have actually looked this up before the meeting today, and I don't know the accuracy of that prediction. I'm sure that Bulkowski has probably tested this. If anybody's got Bulkowski's site handy, his candlestick site, if you could look up the accuracy of the Greystone doji, that would be awesome. I'd really appreciate it. If not, no big deal. But yeah, we typically, after this, we typically see the uptrend, short as it was, come to an end. I kind of think we've got bigger factors at play here, and I'm not going to make trading decisions based on one candle and its ominous name. We're going to look at other things. So let's look at an intraday chart of the SPY, because really, I think that today kind of started yesterday at the close, And let's go through, bit by bit here, what everything that sort of happened in the last 24 hours. So you can see we closed. I mean, we had a great day yesterday, right? Really strong earlier in the day, and basically continued up all day. Beautiful day when really I don't think people expected it to be a good day yesterday. But sure enough, it was. Okay, then after hours, we got earnings from Google and Microsoft, and neither of them were good. And we came down a lot. And there were some other earnings as well that, I mean, they're obviously overshadowed by Google and Microsoft, but some others as well that weren't so good either. And you can see we immediately dropped a lot, tried to rally a bit later in the after hours, and then, drop more all night long. We did try and move up a little bit for the beginning of the pre-market, and that is at this is gap up here. That's weird. Yeah, here we are. 4 a.m. 4 a.m. Eastern is the beginning of the pre-market. And you can see we chopped around all through the pre-market. Trying to figure out what to do. It was not looking good. There was no reason to think things were going to be good. We opened and we got kind of volatile. And we didn't we didn't completely fall apart. In fact, as soon as we opened, I mean, we went up a ways, and we went up into right into that pre-market high before turning around. We came back down, and we managed to hold the open. The open is this blue line right here. So far so good, right? And then right at 10 o'clock, the beginning of this big green candle. That is when the Bank of Canada announced their overnight rate. Now, the expectation was that the overnight rate was going to be a raise of 75 basis points to 4%. They only raised 50 basis points. And the market, U.S. markets instantly started rallying on that, as you can see here. Went up a whole bunch and then pulled back, and then just continued to go up. For the next, what time did we top out here? For, over an hour and a half, pretty much nonstop. And if you read the rate statement, I put a link in the Discord. They talked a lot about U.S. economy and the global economy, and it differs a little bit from, what we've been hearing from the Fed. It's the Bank of Canada is saying basically it looks like the U.S. and the global economy and Canada are getting inflation under control. And especially in Canada, actually, we're seeing inflation come down. The CPI has come down a couple of percent in the last month or two. So everything the Bank of Canada doing is working for Canada, and they're also saying that everything other central banks are doing is working in those countries as well. Painting a bit of a different picture than the Fed is painting. This has caused everybody to think, adding to this sort of Fed pivot talk that started last week. Not a chance, Marvin. Not a chance. Unless you want to make me a U.S. citizen, if you're going to send all your politicians up here, then I'm going to be moving down to the U.S. Yeah, Marvin just said, do you want to trade politicians? And of course I said, no way. Yeah, so I've totally thrown me out now, Marvin. Where was I? Okay, so yeah, basically the economic picture and the inflationary picture is looking better. I think that, in the U.S., we're expecting now that the Fed is going to have to pivot, that it's entirely possible that we may only see a 50-point rate hike next week. I'm still firmly believe there's going to be 75 basis points. But I think there's going to be a lot of talk from them saying, okay, this might be it. It won't be 75 next time. We're going to reevaluate, yada, yada, yada. So it definitely makes the next FOMC meeting next week on the 2nd of November a lot more interesting. Okay, so that is this big move up. Awesome, right? Now, you can see we've come right into that 388 area. If you remember that from the daily chart, That's where we're expecting to see some resistance anyway. All right, so we start pulling back from there. No big deal, right? But then we start dropping all these, short-term moving averages, and we kind of just keep coming down for no apparent reason, and this is not good. And then we drop VWAP right here. We finally get a bounce in around the pre-market high, which is great, right? If we're going to be dropping this much and drop through all these moving averages, through our VWAPs and everything, our last, kind of line in the sand is that pre-market high, and we bounce there. We cut through a bit and then we bounce. But then we rolled over again, and then we came right down to the opening print. And we bounced there a little bit into the close, and we've gone sideways a bit, and we've started moving up. The moving up actually in the after hours is a bit of a surprise to me, considering how Meta is just getting slaughtered, and we'll look at that in a little bit. So this is sort of the picture of the last 24 hours. I mean, there's a lot going on. I'm not. I do not like this intraday price action one bit. We've given back way too much. It was a total round trip, and it looks nasty on the daily chart. But I'm not ready to get full on bearish just yet. I think we still have a lot of reasons to be optimistic. I think that buy the dippers are going to come back in. We've got to get through some economic data in the morning, and that may have been part of the reason for the sell-off. We've still got. There's a lot of important data still coming this week. It's and people may be starting to think about FOMC next week, and that the Bank of Canada this week might have been a bit of a reminder. It was a bit of a party on their rate announcement. Everybody started thinking, hey, maybe we only get 50 basis points, and I think towards after a little while, reality started to set in. But I think that sets us up for a few days of consolidation in this area in here between, say, 380 and 388. And I think that's just fine and perfectly healthy. Let's take a little break. We've had a nice move. Let's consolidate that for a couple of days. As long as we don't break down too far, like I'd really be kind of disappointed if we broke down below yesterday's low. But we could even come down to as far as, say, this breakout point on the head and shoulders, and that would be okay. Technically, that would be okay as well, as long as we bounce from there. So I'm not ready to go full bear yet. I think I'm going to be neutral and say we're consolidating. All right. So there's our kind of big picture on the SPY. The Qs are going to be similar but weaker, of course, because all the damage was done in Google and Microsoft and other tech stocks, the mega cap tech and even the just tech in general. So obviously the Qs were going to be weaker today, and we see that on the chart. But they tried to get back everything that they lost kind of overnight, right? But couldn't do it, couldn't hang on to it. And again, printed this gravestone doji, but right above support. So that's good to see that at least support was holding. All right, so let's look at IWM, the Russell 2000, because this was also really interesting today. And if you read the morning briefing, you notice that I pointed out that the Russell 2000 was green, and the only index that was green in the pre-market. And you can see that it gapped up, right? We had a little bit of a gap up this morning. So it outperformed all day long. I think, what were we up? And actually the Russell 2000 is the only index that finished green today. And Ken says small caps have been a surprise recently, outperforming the other indices. Yeah, yes and no. I think small caps outperforming is what we expect to see, what we want to see, if a bear market is going to be putting in a bottom. Those small caps are riskier stocks, right? So if they're outperforming, then market participants have a higher risk appetite. And, you know, having risk appetite isn't bearish. It's bullish. So small caps should outperform. And them outperforming today and finishing green is good news. You know, I'm pretty happy about that. But again, you know, this is not a pretty candle here, but at least it closed like right at support, right at these moving averages. So we can still be hopeful about this. But again, looks like we've got, you know, we're going to be consolidating a little bit in this area, unless we get some more good news tomorrow. But I don't know if you guys have noticed lately, you know, over the past couple of weeks that um, the market has been rallying on good news, and it's even rallied on bad news. I mean, you know, some of the bad news that's come out, we've seen a bit of a pullback, and then it's rallied on it, right? I mean, that, you know, this CPI print on this day is a perfect example of that, right? You know, gapped way down on that CPI print, and then went way up and rallied like crazy on it. And we've been seeing a fair bit of that. So again, that's not something you typically see in bear markets, you know, so that is bullish as well. Okay, let's move on and look at the volatility index. So as crazy a day as it was today, look what volatility did, right? You know, volatility opened pretty much at its high and then went down all day and closed at its low. And considering how much the market pulled back intraday, this is pretty bullish, right? What we're not seeing is the inverse of that candle. You know, we're not seeing the inverse of this gravestone doji, you know, the SPY printed today, right? You know, if the inverse of that would be a dragonfly doji. We're not seeing that here. So that to me is bullish and reason to think that we've got a really good chance of continuing to the upside from here. Let's look at the 10-year yield. You can see that the 10-year yield has now dropped out of this upward channel that it's in. And we have 1, 2, 3, 4 down days here. So you know, this is hopeful. You know, after putting in a you know, a series of new highs, it rolled over and we're coming down. Now we've got that 21-day moving average just below us here. You know, we'll watch out for tomorrow and see if that acts as support. But you know, we've got the beginning of a bit of a downtrend here, and it's fairly steep too. So that's good to see. Let's take a look at the dollar index. Dollar index had a big down day, and it's had a series of down days, right? You know, we noticed that it failed to put in higher highs up here. You know, after that pullback. You know, we drew in we've got this, you know, trend line that broke yesterday. It broke through the 50-day moving average today. It also broke through this minor support level. Now we're coming into a longer term or a sort of intermediate term trend line. You know, we may very well be testing that tomorrow. It sure would be nice to see us break through that as well. If the dollar's coming down, equities shouldn't be having a problem. So yeah, we're seeing a lot of what is good news for U.S. equities and good news for global equities in our dollar index, in you know, the yields coming down the way they are, in the volatility index coming down the way they are. This is all good news for us. All right, let's take a look at gold really quickly and some of the other metals. We can see that gold is still kind of in this range. Not doing a whole lot. Nothing really interesting there. I'm not sure if silver was very interesting. I haven't looked at this since the weekend. Nothing going on there. Copper, I've noticed has been going up. Okay, this is getting a little interesting, isn't it? So still in this range, but like right at the top of it now. This looks ready to go. It looks like it wants to go and break out. So you know, take a look at some of your copper miners, like Freeport-McMoRan. Teck Resources is another one that does a lot of copper. I won't bring those up right now, but if you're interested in a copper plays, it looks like it might be in play here. Let's look at the Journal of Commodities Index. we can see that that has started to turn up now. Kind of got halfway into the gap here, didn't even get down to the major support, and it started to turn up. It's moved through its 50-day moving average. This is good. We're going to have some resistance overhead probably. We've got, you know, the 200-day and the 100-day moving average there, and of course, you know, this pivot high. You know, this is a good start here on our general commodity index moving up. DBA, the agricultural commodities index. This has lost support and looks to be continuing its way down. So this is actually good, though. We you know, and same with general commodities. I mean, we don't really want to see commodities increasing in price because that's inflationary. Food is one of the big ones, right? And agricultural commodities increasing in prices really, you know, causes a lot of inflation that we see, and it also causes inflation in the, you know, the CPI index. So good to see this moving down. Not great if you're in any of the agricultural commodities. Okay, let's move on to oil. So you can see we have a head and shoulders bottom in oil here. We pointed this out on the weekend. This is still intact. You know, we moved up quite a bit here. We're about to move through a resistance line. This isn't the neckline, though. This is just, you know, plain old resistance here. The neckline is going to be way up in this area here. Still a ways to go for oil to get up there. Let's take a look at natural gas. Has been kind of volatile over the last little bit. You can see we came down, found a bit of support here and moved up fairly quickly. I wouldn't be surprised if we see natural gas consolidate in this zone up here for a while. I don't think it's coming back down into here. I think this area up in here makes a lot more sense for it. Let's look at XLE, our energy company's ETF, and you can see that that is still just climbing its way up, moving up into all-time highs. Got right through this gap, or got to the top of this gap and was rejected there today, but didn't pull back much from there. Closed, you know, pretty much right at the top of the gap. You know, anytime this is going to consolidate wouldn't surprise me at all. You know, just because of the move this has had. You know, where was our low here? September 26th, exactly a month ago. And how much are we up in the last month? 30%, 29%. You know, from the close a month ago. That's huge for an ETF, for any ETF, let alone, you know, for energy is more volatile. So, you know, but still 30% is an awfully big move. Let's look at XOP. These are the oil producers and exploration companies, not as strong as XLE, the more diverse ETF. But still moving up, you know, broke through that resistance level, that other little consolidation we had here, but maybe finding resistance. You know, there's definitely a loss of momentum going on in this one. OAH is the oil services ETF. This one has been a monster, you know, the last little bit. This has got to be up even more than 29%. Look at this. 48% in the last month. Crazy stuff, and coming into all-time high. You know, if you're in this, I really hope you're starting to take some profit. Just, you know, I mean, the momentum, although if you're looking at the momentum here, it's saying just hang on for the ride, right? But it's come so much. When this turns over, it's probably going to come down just as quickly. I mean, as you can see, it did here, you know, back in June. You know, it had a really nice move, and when it rolled over, it went down quick. So when you start seeing some red candles here, when you start seeing this roll over, it's time to get out. You do not want to overstay your welcome in this thing. All right, MRO is one that we got into recently. It's, you know, it hasn't been performing as well as I'd like it to, and we've got a little bit of that what they call a shooting star here, which is kind of a topping pattern. So yeah, it's time to tighten stops on this. Right now, my stop is under, well, you can see where the red line is, right? My stop is basically at break even. I need to move that up, tighten this right up, I think, because I don't want to give too much back on this. And, you know, maybe go part way into this candle, say in the top 25% of that candle, just under 30, 29.50, 29.47, something like that is probably where I'll move it to. But you need to decide what's the right level of risk for yourself. 10, the solars. These have had a couple of really nice days. Look at that hammer candle, doing exactly what a hammer candle is supposed to do. Puts the bottom in, and you know, strong move out of there. And look at today, it even moved right out of that downward channel that it was in. But that pulled back, kind of like the markets, and it pulled right back right from that 200-day moving average. So that's a little bit sketchy. Kind of on the fence about where this might be tomorrow. Let's take a look at a couple of the solar stocks that we watch. First Solar, okay, that has come back up into the range that it fell out of a couple of weeks ago. So that's good to see. That's healthy price action there. Let's extend this one across too. Okay. So let's see what happens here. You know, I suspect that it's going to come back up into here, and it's going to, you know, maybe chop around in the range again like it did. Unless it comes up and, you know, if it consolidates up near the top of this, that would start getting really interesting and maybe worth a play. ENPH had earnings recently and has moved up really strongly off those earnings. And you can see we have that head and shoulders. This pretty much fulfilled its target, right? It came down right to that gap. I mean, this is just a technically beautiful chart. You know, if you're studying or learning technical analysis, study this chart. This thing is a thing of beauty. So yeah, I'll leave you to do that on your own. But you can see we've had a really nice breakout here. It's moved back up into the range, and now we've got an indecisive doji candle here. Again, this sort of tells us, all right, it's time for this to consolidate a little bit. I mean, this has been a great move, right? I think you'd be surprised how much off of that low. Yeah, 25% from that low in 1, 2, 3, 4, 5 days. Not a bad move. Okay. Let's look at consumer discretionary, see if there's anything interesting going on there. And yes, you can see we're coming off a bottom here. We put in a swing. We got our high, we got a swing low, and now we've got a higher high. Awesome. This is how uptrends start. So let's be optimistic and start drawing what that uptrend might look like. Yeah, I really like to see that. And in consumer discretionary as well, one of the sectors that is really kind of underperformed. Industrials. Again, higher highs, right? You know, higher highs, higher lows, beginning of an uptrend. Awesome. Really happy to see that. Talked about a little bit industrials. I have been mentioning industrials a fair bit, and noticing how you know, I figured it was going to start outperforming. I've been having a hard time finding individual names though to get into, unfortunately. You know, there's the aerospace and defense sector is kind of the leader in here. But you know, most of those companies have moved up so much already; they're tough to get into. But if anybody else sees any industrial stocks that they think are any good, please let me know. Let's take a look at financials. Again, look at the beginning of an uptrend. You know, we've got some higher highs, and now we've got higher lows. Looking good here. Looking good. Okay, who's next? All right, technology. Even technology is actually starting to look okay. You know, it's tried to put in. We did technically put in a higher high here, but just barely, and then got rejected, right? And we've got this gravestone doji, or you know, shooting star, whatever you want to call it. Yeah, I don't know. You know, it's a little sketchy here, and you know, I mean, as you know, over the last couple of days, that we're not seeing anything good out of the technology sector really, except that, it's trying to hang on, here. Um, so let's take a look at the communications sector. This one is the weakest of all sectors. This is where Meta is. Google's in here as well. Not a great day at all today. It really threatens any uptrend that might be forming. But we did make a higher high, after making a higher low. So it still has that going for it. Does the 21-day moving average support? Can this turn up tomorrow? I don't know. Jury's out on that one because Meta. All right. So this is not showing the after hours price action in Meta, but you can see we are very much in a downtrend. Things are pretty nasty. Let's go look at the intraday chart so that we can see what Meta did after hours today. I know this looks messy. This lines all over the place. Usually these lines just spread out more. It's a little cleaner, but because Meta moved down, this is not, by the way, a logarithmic chart because it's just an intraday chart, right? Because Meta moved down so much after hours, everything up here got compressed. Okay, so obviously, nobody is happy with Meta's earnings, and it is now down into this 105 area. That was down, I put a measurement on that a little earlier, down 20%, from the release of their earnings, which puts them down, I think, from yesterday, or sorry, from the open this morning, puts them down, 20%. From yesterday's close, that puts them down 23%. However you slice it, this is nasty for a mega capped stock. I'm not sure what the market cap loss is on this. It must be huge, because this is or was a mega cap stock. I mean, I wonder if we can still call this a mega cap stock. Anyway, just a nasty move in Meta, and surprising because there's been so much negativity in this stock, for so long. I'm surprised it was able to go down that much on these earnings. Okay, so where are we now? So we're sitting at 105 right now. So let's just draw a little line there. So we're right about here right now. Okay, so you can see we've cut through a couple more support levels. We're going to have to go way back into the past and see if there's anything that might hold this up. Whoops. There we go. So what do we got here? Yeah, I mean, it looks like, maybe could be something right in around here, right off of that pivot right there. Let's get that in there. Oh, so that's like 98. That kind of makes sense. What else? And we should get stronger support from all of this right here. This is ridiculous. And I'm looking at 72 to 78. But that's where the strong support is. But 100, 98 to 100, I think should be strong support. But I mean, I also didn't think it would fall apart like it has either on these earnings. I thought all the negativity was built into it. So there you are. That's Meta. Hopefully you're not in it, but no doubt if you're holding any index ETFs or anything like that, then unfortunately you have some of that in your index ETFs. All right, Apple. Maybe Apple. So what do you got? Apple is. It's tomorrow. Maybe Apple will come and save this market. Hopefully. Apple had a bit of a nasty day today, but it's been doing good things. Oh yeah, and Amazon too. Yeah. Okay. I mean, with Apple and Amazon coming today, that's another reason that it would have been difficult for. So yeah, I mean, you're looking at all the gains you had today in the market, and Meta's coming after hours, and you got Apple and Amazon, the day after. It's not surprising, to see some selling on all of that, right? Um, and Amazon, kind of chopping around. But what we've seen in consumer discretionary gives me a little hope that if Amazon has a down day tomorrow or on earnings or wherever, this support level should hold, and certainly this pivot level here. What is that? Which downside is that to that pivot? I think even when Amazon disappoints, it doesn't disappoint that much. And so, yeah, this pivot area is down around 7.5%, 8% from where we are now. That would be a big move for Amazon, I think. Where I mean, we have big moves up sometimes. Like this was a nasty move in Amazon here, and that was probably a little more than 8%. But this was a really unusual move 2 earnings ago. So yeah, I think that any move down probably supports in this 107 to 105 area. Netflix. So Netflix still trying to move up through this gap. Still trying to make me feel like an idiot for not just FOMOing into this thing, but you got to stick to your rules, and my rules say you can't buy something when it gaps up like that unless you get a good setup, and it never really set up for me. So Google, okay, we all know that Google had terrible earnings, gap down a ton after trying to break out out of that range. Wow, round trip right from the top of the range or outside that range and right back down to the very bottom and outside of the range. Is this gonna support here? I kind of think it will. Although, it did close on the lows today. I didn't actually pay much attention to this one intraday. Okay, not too bad. Yeah, I think that we're going to see, we'll probably see some consolidation, towards the bottom of this range before this can start moving back out. And you might even see a bit of a flush through, maybe a capitulation. Although this today here, this daily candle, sure looks like capitulation to me. I mean, look at the volume, massive volume. We haven't seen volume like that since some, other earnings releases. So I don't think there's much more downside in Google, and you can see that we've got some pretty decent support levels below us as well. Microsoft, and these guys just had. Oh wait, no, their earnings coming. Oh, ways off. Didn't they guide down or something? Something happened on Microsoft here, or maybe it was just on Google and.
Or their earnings were yesterday.
They were, eh? Why isn't?
Yeah, they were the cloud services and things were pretty flat. So I don't.
Yeah.
It wasn't really an exciting earnings call from what it seems.
Okay.
Yeah, they beat on top. Yeah, and bottom. Yeah, exactly. Yeah, the revenue cloud services down really flat.
Yeah, and now I remember it. I don't know why I didn't trust myself rather than trusting the chart. Look, my chart prints a little E here every time it has earnings. It shows us, what the EPS was. Anyway, it's been quite a day for me. I was trading like a madman today. Had a really good day. Really enjoyed myself trading today, and it's left me a little bit brain dead. Or a little bit with those sort of I've completely lost all my short-term memory for today. All right, so big gap down on earnings, into a support area. Is this going to hold? Again, I think so. I think kind of like Google. I think this area is going to hold. I think we've seen. I think there's a really good chance we've seen the bottom of a lot of these stocks, and with this earnings now out of the way, it just gives us a better opportunity to put in a bottom here and above this pivot. So, all right, let's take a look at Tesla. So I think with Tesla, we've just had earnings there. Elon, paraded himself into the Twitter office this afternoon. He's been saying that the deal is going to be done by Friday. I can't see him walking back on it now, on that Twitter deal. And the financing must all be in place. So I mean, any selling that we think that he might be doing in Tesla to get some money for Twitter, that's got to be done. Wouldn't surprise me now to see Tesla moving up out of this hole now, getting back up to sort of the top of this range, and maybe it needs to consolidate in here. Maybe we can see some good news to break it out, but I wouldn't expect a ton until our next production reports and that sort of thing come, and any sort of guidance that they have going forward. Yeah, again, another one where I really think the bottom is in. All right, let's look at semiconductors. A disaster of a sector, but trying to climb up out of their hole. There's just so much going on politically with semiconductors. It's a tough one. But I mean, this is nice price action here that we've stalled out here at resistance. Not a surprise at all. I think this needs a couple more days consolidation here, and then maybe we can start attacking some of these levels up here. But I wouldn't expect a lot out of this sector in the near term. And I think there are better places for us to put our money at the moment. Healthcare. Healthcare has been rocking the last few days or the last week. Really big moves here. Coming into resistance, though, I mean, this is stretched, right? And a candle like this is what you expect to see on something that's a little stretched, especially as we near resistance. This could have another up day, but I think it would be healthy for this to consolidate somewhere, whether it consolidates here or moves up a little farther and then consolidates. I think would be healthy. But yeah, this is a space that on a little pullback or a consolidation might want to be looking for plays in this healthcare space. XBI, the biotech, is sort of in this barely upward channel, defying this head and shoulders top here and trying to move up, but having issues. Right, it doesn't look quite ready yet, but it's not bad. There's another biotech ETF, and I like the technicals on this one a little better right now. You can see that this one is actually, if there was a head and shoulders in this, we've broken up, but above the neckline would basically be here. I should draw this in here. That is basically your neckline on this head and shoulders. And you can see that, I mean, after it came out of that, it went right back up into it, and now we're moving out. So one of the biotech ETFs is doing much better than the other. And I actually bought some of this one a couple of days ago because I do like having some biotech on, because it can make big moves when things start getting going. When the market is risk on, biotech is a fun place to be for a swing trade. Let's take a look at REITs. Bottom is holding, but nothing exciting going on. Staples, rounding bottom that we pointed out quite a while ago, and really coming off of that, making a strong move out of there, but coming into resistance. It should take a break, take a rest there. And utilities. I think, utilities are looking like they've put in a bottom. The move off the bottom isn't quite as strong. It's still not a bad move, though. Wouldn't hurt for this to, just kind of hang out and go sideways for a little while. It is a defensive stock. We don't need to see this moving up a lot. All right. We were talking about gaming companies, gaming software companies. in the chat in the Discord earlier today. And one of the names that came up, so we started by looking at Electronic Arts. And there was talk, you know, I'm not much of a gamer. I haven't really been a gamer for years, right? But Electronic Arts, actually, when I had my company, was one of our clients. We put sound systems into their campus in Vancouver here. So that was fun. I always enjoyed going there. It's a really cool place. And actually, I had a tour. I had a tour of their production studios and stuff, where they do the motion capture and that sort of thing. And so, being a techie guy, I really enjoyed that. You can see that. I mean, EA is basically just sideways for, you know, really kind of 5 years, you know, since 2017. It really hasn't done much of anything. And that kind of backs up. I mean, I know Marvin and a couple other people were saying, you know, their games are just kind of mediocre, right? And this chart is kind of mediocre. There's nothing really here that says, hey, I want to get in this stock, you know, other than, I mean, it's just building a giant base. Maybe when it breaks out of this base, then I might be interested in getting in this. But you know, I mean, it's got to get above this, right? Might as well just draw that in there. That level right there, major resistance, right? But you know, I mean, it has created also a channel to the downside, or support to the downside as well. But yeah, I see no reason to get in this until it breaks out of here. Or maybe when it looks like it's you know, getting ready to break out of there. So that's EA. So not terribly interested, although they are a financially healthy company, and yada. So that brought us to Take-Two. So Take-Two Interactive is more interesting to me. Now, this has also, you know, you could say that this has gone sideways since 2017 as well. This chart just appeals to my eye more than the chart of EA, because we're starting to see now. You know, you can see that the bottom of the range is fairly well defined. We've got that support level there that, you know, kind of goes all the way back. We've got, you know, the stronger support down here below. And we are, you know, making a nice tight sideways, or have made a nice tight sideways. Can't talk anymore. A sideways consolidation. Recently, it broke out the bottom of that, and then it came right back in. So this gives us really nice levels to work off of, and it's pretty decent price action, right? You know, it put this low in May, came up, consolidated, came down, and it's put a higher low in. You know, pretty much. We want to see some higher highs, right? In the very short term, we are seeing higher highs and higher lows. On the intermediate term, we want to see higher high, and that means getting above that high. But you can see this pennant here that we've broken out of. Now, we didn't break out of that with strength, but we are now consolidating here. So, I mean, I think there's a play in here right now, and it's fairly risk-defined. And I think that you could take this as a short-term swing trade, and as long as it's behaving, you could let this turn into a long-term swing trade. And if you're so inclined, if you do your research on this company and it does kind of pan out, I did a really quick look at the fundamentals, and they look okay. Not outstanding, but they certainly look okay. You know, I need to do a deeper look there if I was going to invest in this company. But this looks like an opportunity, you know, to get in something at a decent price, something that might be a half decent investment. And certainly technically looks good here, and, you know, could start moving higher and continue higher. There's definitely room for this to move up. I think that anybody who's still in this now after this downtrend, they're going to be holding. They're not going to be bailing out as this starts to go up. At least not until we get up into this 170 level, which is like, you know, $50 away, right? So yeah, a lot of interesting stuff going on here. Marvin, you're you know, into gaming, and you're one of the guys who was talking about this in the Discord earlier. Is there anything you want to add to this?
I mean, I just knew that that with EA, like I was saying, yeah, as the chart said, I was like, yeah, you don't have anything. Versus now, what you see is, I think Take Two has kind of been kind of doing that for a while. I know from a consumer perspective, I would say primarily because like they have the kind of their staples like Grand Theft Auto Online. That's really been a money printer, honestly, for them.
Yeah.
It really has been. And then also you have NBA 2K, which has a huge fan base as well. So they have a few games, I think, and some other things I'd imagine that are really kind of printing for them. I mean, kind of keeping them stable. And I
Yeah.
think it's more or less trying to see, okay, now that there's kind of some buzz with like Grand Theft Auto 6 coming, and some other things that they're working on, I wouldn't be surprised if we begin to at some point see maybe you could, like you said, you can see some price movement, but they, with games, it's really like centered around like some big news and partnerships. I was about to make a joke about EA and say, who knows, Sony might buy them because, they still trying to figure out a way to stop Activision getting bought by Microsoft. But
Right. Right. Oh,
so
that would be really unfortunate, wouldn't it?
yeah, I mean, I think the deal's gonna go through, but I just know like the Jim Ryan, I believe is his name, the PlayStation president, I think on
Okay.
the U.S. side.
Yeah.
Uh, I know they have had, well, him and some Phil Spencer, like they've had words, not like personally, but through media, and it's really just because of the way I think Sony, in terms of their litigation team, has
Right.
really been pushing to try to stop this, and so it's like, because they feel like, I guess that they're going to lose out financially, I guess, should Call of Duty, which is a big game, go, kind of get pulled. But, from Microsoft's perspective, it's like, they're competitors and we want to compete. We're not leading in the video game industry, so we want to compete. And they had already promised that, Call of Duty would be around for a while. So I think in terms of, like for me, you really, I think about what are some of the kind of the hot games in terms of that's coming. And I think with Take Two, you definitely probably would see a rally before EA, I would imagine, which is why I threw their name out because you have Grand Theft Auto 6, which is been in works and got people kind of buzzed when the leak happened
Yeah.
because it looked like it's like at least that they got maps and they got character models and things kind of done. And they hold a lot of Rockstar game portfolios and some other stuff, including 2K games. So they have a much bigger portfolio than EA at this moment. So
That's interesting. Okay. Yeah, that's helpful. So the one thing we have to be worried about here, or well, not worried about, but aware of, is earnings on November 7th, after hours. So hate getting in something like this when earnings are so close. So we got the rest of I mean, if this were to break out tomorrow, say we've got the rest of this week, we've got all of next week. But for me, swinging it, I really got to have second thoughts about holding it through earnings. Even if I was starting an investment, I generally wouldn't want to start an investment this close to earnings. So just be aware of that, and do what you're comfortable with. But there could be something here. I definitely think we should be keeping an eye on this one. All right, so I have wow, taken up a whole hour with this. Sorry, guys. Um, well, you know what? I mean, it's been a big day, a big week, right? There was a lot to look at here, and I think it was important that we look at all that stuff. So it is time to move on to the audience participation part of the program. And if you guys have any tickers, go ahead and put them in. Marvin, you mentioned ServiceNow? You said ServiceNow went crazy after hours today. Did you want to take a quick look at that one?
Oh no, I was just throwing it out there because we
Okay.
was talking about earnings. I think like in Kansas City, it's like it's up 13%.
Wow.
Yeah. So
That's a nice move.
that is a very nice move. So while we were talking about earnings with like other tech companies, like with Amazon and Apple, I was like, well, ServiceNow had an amazing earnings day after hours. So that's why I just threw that out there.
Hey.
But yeah, that wasn't for me. I guess if the companies or the charts that I was talking about earlier, I have we looked at MRO, that was one, and then I've been looking at OKTA.
Okay.
And I've also marked up, and I'm looking at Walgreens. So those are kind of the two that I have. So I can go through them real quick. And
did you want to show us your charts, or do you want me to bring them up?
Whatever's easiest. I mean, if I know I see we're on time, so if it's easier just for you to bring it up, that's fine. I don't have a problem. Or if you want me to share, I don't have a problem with that either.
If you want to share, I'm totally cool with that.
Oh, okay. I mean, I can share. For sure. I don't mind.
Let's see. I got to make you a host or a co-host. There, I just made you a co-host.
Got you.
Okay, you should be able to share now.
Okay.
Hopefully this comes up.
Here we go. So hopefully y'all can see this. I'm kind of on a wide screen, but I'll at least bring it down. At least try to zoom out some.
Got it. Okay.
So sorry.
How I don't get to see it except on my laptop, which is basically here as a user. Okay. So anyway, I'm looking over here.
Got you. So
your chart.
Got you. So OKTA is a kind of like an identity management platform. So in terms of tech, and I think they came up on I was messing around actually in TradingView's stock screener, and they just kind of stuck out to me. They kind of like the RSI when I started looking at it was improving. The MACD was improving, and so I was just like, man, it had a vicious move on earnings back in August. It like fell from high heavens, and so I was like, oh, and it was like, okay, well, I've been watching it, and so for me, my go-to signals, like of course with like the MACD improving, RSI improving. Also look at the crossover EMAs, and also from using the 9, the 21, and the 50, and then I also use like the 5, the 10 crossing over the 20 SMA.
Right.
So that's which are the lines you're seeing, and then you also see this thick orange line. That's the VWAP, if I'm not mistaken. Yeah.
Okay.
So I started to see that it started to cross around Monday, and so what I did was I was like, well, I bought some calls, and so I just swung them. And then today I saw this. So I was like, all right, I'm gonna get out, and because today I saw that. It looks like an inverted hammer to me almost. So I feel like there's going to be a little bit of a pullback. And so we'll see what it does. But to me, if like the uptrend continues, I don't see, hitting 66 wouldn't be an issue. Because it moves pretty decent in terms of days. And that was the other thing I've noticed that, let me see if I can, no, I didn't want to do that. Let me go back. There we go. 1 second. It has gone away. Some kind of way. I have no idea. Oh, there it is. So I just don't know where it went. I have no idea. Where did this thing go? So anyway, but so I can try to load it again if it does it. There we go. So I kind of noticed that it it moves pretty heavily within days, roughly around $3 to $4 within a day.
Yeah.
And weekly it moves anywhere. It's been moving at least within the past month or so, about $15-16. So
Yeah.
I was like, I could pick probably swing some calls up to 66 and then go. But also too, in terms of maybe looking at definitely looking at also too possibly buying some shares and just sitting on them because it's a nice move. So for me, I would think so.
Cool. Can you go back to the daily real quick? I just want to.
Yeah, I can for sure. Just
So notice how, and actually just sort of zoom out a little bit.
zoom out. I can cut some.
Or sorry, no. So like I want to actually zoom into like the most recent price action. I want to be there. You go. Yeah. Notice look at all of these candles have big wicks on them. And, like coming into or a week ago, right? They all had kind of selling wicks on them, and then you got into a couple of days where you had buying wicks, you had wicks below, right? And then you had the big day yesterday, and then today you got like selling wicks and right from resistance as well.
Yeah.
This is I think this is kind of something to really pay attention to with this stock, because it's really stood out to me that it's very wicky. So it makes it hard to have stops.
Yeah.
You got to really be you can't kind of put your stop in the market. You maybe got to use an alert, and then you got to look at the price action and make sure you really want to stop out. Requires really good discipline. But did you say you took some off today?
Yeah, I bought I think it was Monday. Monday I bought some calls and I swung them, and I think it hit for like 30% or so.
Oh, nice.
And then I saw this candle for me, and I think I was like on the 5-minute. I was like, it was a break at work, and so I was like, I'm getting out because I think it's starting to turn. So not that I didn't, I could have held on to them, but I was just like, I'll just take it and then see what price action does tomorrow. I picked up a put for tomorrow just to swing to see. We'll see.
Interesting. That's daring.
I know it is daring. It is daring. We'll see.
There's a lot of support down there.
It is. It is a lot of support. So I only picked up one just because I was like, just one, nothing big. So but I just picked up one just to see because I saw the inverted hammer, so I was like, it might consolidate and move down just a smidget tomorrow. But then I definitely think, I'll get out of it tomorrow for sure. And then I think it's going to start to possibly swing up. I don't know. But, definitely with that support that's there over the past few days.
Yeah.
And with the way in which I feel like it's kind of had this nice little bottoming out.
Yeah.
I don't see why, like, to me, swinging this up to get back near those, I don't think it would have no problem doing that at all. So, and I thought that would just be a nice swing trade. So that's why I looked at that. And then been looking at Walgreens too, because I started been paying attention to it. And I remember we talked about it roughly around earnings, and it blasted through. And I think it was like a couple weeks ago, maybe, or was it last week? Yeah, a couple weeks ago, or last week, a couple weeks ago. And so it blasted through, and then it had that bit of a pullback. And so I bought, I think, last Thursday or Monday, can't remember, or Friday, might have bought and just kind of holding it back up because I was like, well, once it gets near here, and it did, and it pushed through, of course, it had a little bit of a pullback. I can't remember why I marked that, but I was like, I don't see it having an issue getting back up near $40. So that's kind of why, I was looking at these as possible swings. So we'll see.
So this has made a pretty decent move. Looks like you've got a pretty good entry there. That looks like a good trade, and you're identifying, potential areas of resistance that it's coming into. So that's good. definitely, getting the hang of this, and I'm seeing some of the, the trades they're posting in the Discord, and that's great. You're doing really well.
No, listen, it's your wisdom.
Good trades.
So it's your wisdom that's not financial advice. So but yeah, no, I appreciate it. So that's what I'm working with, and those are the ones I've been looking at, and so keeping my eyes on them very much so. So we'll see how things continue to go.
All right. Oh, there we go. Let's go back over here. Okay. Thanks, Marvin. That was great. Really appreciate that. It's always nice to look at other people's charts. Okay, so Ray has asked if we can look at MBLY, which IPO'd today. So Ray, were you trading this today? So we'll have to look at a intraday chart, obviously. I called it MBLY, MBLY. There we go. Ray, if you're there, I'm just curious if you. Oh no, you missed it. Okay, yeah, I missed the entry on this. So I put orders in down near its IPO price, which was the IPO price was $21, and I put some orders in that area. But it opened higher than that and went up. So I didn't catch any of this. And I thought, you know what, if this pulls back down to, the opening price of around 26.70 or so, that'd be a good area to buy. But I was focused on something else at that time. Like I said earlier, I had a lot of trading going on. So I missed it when it got down in here. I should have set an alert. I know I say that all the time, and I really do need to get disciplined with setting alerts. But so miss this because I probably would have bought this. I probably would have bought this up in here, in around the 27 plus area. Once it got above that little consolidation there, and started to settle down a little bit, and so that would have been a nice move to get in here on it. So that's how I would have played that today. So here's what you need to do for tomorrow. If you're looking to, if you're looking at what are you looking to do with this? Are you looking to get in on this as an investment, or are you looking to swing trade it or day trade it? What is your plan with this, Ray? Just a trade. Okay. So the thing to do is with these, stocks is move over to your. So they're self-driving systems for cars. This is spun out from Intel, right? So it's a division, or Intel bought this. It was a private company. They bought it. Brought it into Intel. And have now decided to spin it out. So it is self-driving systems. So the hardware, and I believe the software for self-driving, or autonomous driving, that's what they do. So it's an interesting company. It's one of those companies that could be very volatile. That whole autonomous car thing, electric vehicles, yada yada, is all very volatile. But generally, when you want to play an IPO, you just take take the chart of price action day. It's actually playing these the next couple of days or next few days or a week even. They make really good day trades because we're all looking at the same levels. The levels are obvious here. And it makes it pretty easy to decide where to trade from. So first thing you want to know is, what is the IPO price? And then, oops, I'm going to have to. The IPO price was $21. So I always put a line in for that, even though it's way down here and this should not come down to here. I'll put that line in. So the IPO price, and I'm going to have, I would have to transfer all of these over onto a daily chart at some point. But for now, this is fine. There's our IPO price at $21. I want to put in the IPO open, right, which was right here. Want to know where that level is. So here's, two really important levels, and you can see we have interaction with those levels. See, the first time this came down, it respected that IPO open price, and it respected it a little bit here, but then it broke through. All right, so when it broke through, it put it in an all-time low, so I'm going to draw that in. So there's our all-time low, and we'll also want to get in the all-time high. Okay. And you can see this is, there is definitely going to be a resistance zone in there. So I might draw that in as a zone, something like this. All right. So we can expect to see, I wouldn't be at all surprised if tomorrow we come back up to this area, we see some selling initially. And if we see a move through there, it would probably go really quickly. Another area on this chart is this 29 area. You can probably see that we've had a fair bit of interaction with price there. So let's get that in. And also, I think that this area here, I think that might be important. Possibly this one. Okay. So you see now how, we've got now for tomorrow a number of levels to work from here, which generally makes trading fairly easy. And anybody who's trading this is going to be trading off of these same levels. Maybe some people might see this after hours area in here, perhaps. But I think that the levels I've drawn in, I think will be pretty obvious to 90% of people who are in trading this. So yeah, if you do this to your own chart, anytime something IPOs and you want to day trade it or even swing trade it, because if we get above the all-time high here and hold, or get above today's high, this resistance zone up here and hold, this could very well continue higher. Conversely, if we get down below this IPO open level, I would start to be a little afraid, and especially if we get down below today's low, we could be going lower. And I would definitely want to be short below these levels, because we may very well come down into this 21 level where, again, it should hold. Now, Intel's a big company, an important company. This is their baby. I think that we should really expect to see this hold above this IPO open price. I think that Intel and probably their underwriters are going to be supporting this. So we may see big institutional buying when we get down in this area just to try and support it. Because the last thing that, Intel doesn't want to taint their reputation by having this completely break down, right? And so Intel is a big enough company. I would think that they'd be putting some pressure on their underwriters if this starts to come down here. So yeah, I think that this has a good shot to definitely hold a support here, and in general just to go higher from here. So that's what I've got for MobileEye for you. Hopefully that was helpful. And Ray also wants to look at Ford. So we'll go back to a daily chart on this. Oh, what happened? Oh, wait, Ford had earnings today, didn't they? Yeah, okay. Huh, really volatile there, wasn't it? Wow. It's interesting. So we're down a bit, not a ton. Yeah, in what? 20 cents? It's nothing. Okay, let's move on to a daily on this. All right. So there's a pivot here that seemed to have acted as resistance today. Get that drawn in. These lows right off that pivot right there. Yeah, that's a really nice support level there. You can see that we've put in a, double bottom recently, but we have this series of bottoms here as well. Going back into June and July, we bounced off of there again. So actually, this should be drawn in as major support level. Be quite surprising if this level breaks, having tested it successfully so many times. But we got this little minor resistance. So I see Ray says, I'm looking to get leap options, but looking for a nice entry. Okay, so volatility is really high right now. Let's see. I want to take a look and see what the implied volatility rank is on forward, and it is elevated. Okay, I'm going to bring this over into here for a sec. Hopefully everybody can see this. Okay, so you can see our volatility rank is at 75%, meaning volatility right now is higher than it has been 75% of the time over the last year. And that is elevated. Yes, Ray, it is a free website. To get this information that I'm looking at, you have to register. But they don't spam you or anything. Or if they did spam me, I just unsubscribed or whatever, and I've never seen an email from them since. So yeah, this is a great site for looking at. There's a number of things on this site. I mainly use it for volatility because it also gives you a nice little chart of volatility as well, which is this line here. So you can get to this page. If you look at this menu over on the left, it's right here where it says implied volatility. Gets you to this page. So, but this is important, especially if you want to buy leaps, because it's telling us, okay, implied volatility is high, and that means that options are expensive. And if you're buying leaps, you're buying a lot of time, and which means that you're buying a lot of expensive time. So we really want, if we're going to be buying leaps, I generally won't buy leaps if implied volatility rank is above 30. Because I want time to be cheap. I don't want to buy time when it's expensive. I don't want to buy, generally don't want to buy options when they're expensive. So if you're really sure, if you really believe in this company, if you really believe this is a bottom here, then yeah, you can pay up for those leaps. But just be aware you're paying up on those leaps. If as this goes up, implied volatility will probably come down. As the market improves, implied volatility will come down. And the pricing of options will come down with it. So hopefully in that situation, the price forward is going up at a faster rate than implied volatility is coming down. As implied volatility comes down, it makes options cheaper. So you could get in a situation, and this is the danger of buying leaps when implied volatility is this high. Yeah, that might actually be a good option. As long as you're aware of the risks of selling puts. Ray said here it might be better to sell puts. If it breaks that major support. So if you sell puts, you've got to sell them down here below the support line. Ideally a little lower, even maybe 1050 is a good place to sell puts. However, this is not a good time to sell puts because we are now coming into resistance. It shouldn't surprise us if we roll over a bit and come down, in which case, you would get, you'd be better off selling puts. You're better off selling puts down here as it bounces off. Like, when this bounces off support, that's a good time to sell puts. Not here where it's, we've got a little bit of resistance and it could roll over. So You know, for this one, I would be inclined to, and this is not financial advice, but if this were me, I would just be buying stock here. If I really like this company, I think it's going to do better for the future, I would just buy stock. But if you're, you know, I mean, if your account size sort of, you know, I mean, this is only a $12 stock, so you know, so you can get a fair bit of stock. But if your account size says, hey, you know, I can't buy the amount of stock that I want to, then yeah, I can see why you want to buy Leaps. But maybe instead of buying Leaps right now, maybe the thing to do is to buy some calls, but not all that far out. So you're not buying a bunch of time yet, but you still benefit from this going up. You know, and as this goes up, you know, more implied volatility should come down and making those leaps a little bit more attractive. So in the short term, maybe you buy shorter term, you know, calls on this, maybe just a couple of months out, with the thought that, you know, as this goes up, then when the volatility regime gets better, then you buy those leaps. But you know, technically, yeah, I mean, I think I think you're on the right track here. This does definitely seem to be bottoming. We've got some decent price action in here, and yeah, I don't blame you for wanting to go long on this. Cool. All right. Yeah, you're welcome, Ray. Ken, was there anything you wanted to look at? All right, Ken's good. Cool. Well, we're almost an hour and a half in, so I think unless anybody has any other questions, I think I can start winding down. Well, I can still speak to say good night to everybody. So next, oh, don't have it on the calendar yet. Don't have the November calendar done, but next, a week from today, we'll definitely be doing a ticker talk. But I think the following Wednesday after that, I think we'll be doing an educational session. Or actually, I think what I'd really like to do is a little bit of a roundtable with talking about, because Justin wanted to talk about, you know, what do you need to do, or what did I do, you know, to become a full-time trader? What, you know, what do you have to have in place and that sort of thing? And so I thought it'd be cool to have a discussion about that, you know, with a bunch of people who are, you know, who see that as, you know, maybe, you know, off in their future. So I think we'll have that in a couple of weeks. But next week will be another ticker talk, and of course, I'll be putting out a video on the weekend. You know, looking at much the same stuff that we looked at today. See if there's any updates and seeing what we've got coming up for the following week. So that is that's it. So thanks for watching, everybody. Thanks for watching the video. If you've made it this far, you're awesome. Hit that like button, subscribe, all that good stuff. And I hope everybody has a great night, and we'll see you all in the Discord tomorrow.